One day after we learned inflation kicked up last month, the producer price index is showing a similar increase. PPI increased 0.2% in October. That is the same as the CPI. So let's bring in CBS News MoneyWatch correspondent Kelly O'Grady. Good to see you.
Good to see you.
All right, so let's talk about the consistency with the CPI and now the PPI. Break it down for us.
Yeah, so CPI, it came in a little bit hotter than expected. Same thing with PPI. Now, PPI, these are producer prices. And what that means is the increase or decrease that producers are seeing. And of course, we talked about this yesterday, Vlad. That's important because they always pass that down to us, the consumers. So that really impacts consumer inflation. The thing that really stuck out to me, Vlad, is that last month on an annual basis, we saw 1.8% on the PPI. That is below the 2% target that the Fed wants to see. This month, it actually ticked up to 2.4% on an annual basis. So kind of when you think about it in the context of that 2%, it's not what the Fed wants to see. And that's similar to what we saw in the CPI. So what does this mean for you at home? This means that this could be a bellwether that we are seeing inflation start to tick up a little bit. I don't want anyone to panic yet, though, because it's more about, do we see this consistently happening month over month? Right now, we're hitting a speed bump. Let's see if this turns into a pothole roll.
Right. Well, so what's behind all of that then? I think people are going to say, look, we've been hearing from the press, the media, that the economic data that's coming out from all indicators is strong. The U.S. economy is strong. So why this little bit of a weakness?
Well, so the fact that the economy is strong, that's kind of it, right? Because you have people going out and continuing to spend. Something that surprised me this morning.
Heating up here.
Exactly. So I always like to look at Disney earnings. And
that came out gangbusters.
Gangbusters. And what does that tell you? That's consumer discretionary spending that people don't need to do, but they do if they want to, going to those parks. And that was actually really strong. And so it shows that maybe people are putting things on credit cards, which is not great,
not good.
But people are still spending. And so that's why you're seeing that be a little bit hotter than we expected.
All right. So we're probably going to ask you this question every time you come here because it's the question that the folks who watch us have. So what does this all mean for the Fed and interest rates?
It keeps the debate alive that maybe the Fed doesn't cut next month, right? So the market, we talked about this yesterday, still pricing in the fact that we would see a quarter point cut. But the fact that we are getting this read after yesterday's read on inflation a little bit hotter, that is economists essentially are saying, okay, this is more data that maybe we shouldn't cut, but we're going to have a couple more reports before that Fed meeting mid-December. So this is just one data point of many.
All right. Kelly, always great to have you in studio. Keep coming back.
I will.
Appreciate it. Thank you.